Hi guys, and welcome back to CashBright, your guide to investing in an ever-increasingly uncertain financial world. So let's talk about the Wirecard stock, whose price has rocketed during late June 2020, despite the German firm filing for insolvency following an accountancy scandal involving fraudulent information in its 2019 audit. Its CEO was even arrested on suspicion of falsifying accounts. If you are unfamiliar, the company is most known as a digital payments platform for businesses which, according to its now slightly suspicious audit report of 2019, generates billions of dollars of revenue per year. So, on the surface, this all sounds like a big company falling on its own sword to die a slow and painful death. But could we be missing something here? After all, the stock price has increased roughly 300% following the announcement that the company has filed for insolvency. Let's look a little closer. So the Wirecard company is evidently in trouble, and I think it's safe to say that the majority of investors are not buying this stock with the aim of holding onto it for the long term. So without really needing to dive into the specifics of the company's balance sheet, I think we are in all likelihood seeing the effect of a troubling rise in day trading from young and inexperienced investors via apps such as Robinhood. Day trading is just what it says on the tin, the act of buying and selling stocks all in the same day in order to capitalize on expected price changes. Now, it's a seriously dangerous and risky form of trading, with around 90 to 99% of all day traders losing their money. The psychological drive behind day trading is attributed by many to what's known as the greater fool theory. This theory holds that an investor will buy a stock even if he knows the price is inflated, because he expects that he'll be able to sell it to another investor for a higher price, that is, a greater fool than he or she. Whilst it is technically possible to profit from Wirecard's stock price jump through day trading, the risk associated with such speculative investing is massive, and in my opinion, this stock is not to be touched even with a 20-foot barge pole. But wait a minute, is there some value in this stock we are all missing? Is this a case where analysts are just wrong, and the lucky few, if they are brave, can make lots of money? Well, aside from the dangerous game of short-term buying and selling of this stock, some investors may point to the possibility of stockholders receiving money once the company is liquidated. After all, owning stock is to own equity in the company itself. Well, according to local analysts, this is highly unlikely to happen. Even if the company manages to sell its assets, this will be at below market prices, and there would have to be enough money to first pay each stakeholder or creditor above you in the payment hierarchy. Employees at Wirecard have even reported not being paid for June, so the chances of an investor such as you catching any of the liquidation proceeds are slim to nothing. Overall, I must emphatically say that this stock is not one to invest in. I know that investors out there will be tempted by the sharp price rise. Indeed, they may even be motivated by the equally bizarre price rise of Hertz's stock earlier this year, and reports of some daring investors reporting gains from day trading the stock, despite the company also filing for bankruptcy. But trust me, this one is a dead cat bouncing. Ignore the hype over this one, people. Better opportunities than this will come along in the future, and you are much better off staying well clear of this stock. Thanks for watching. If you found this video to be helpful, please leave a like, and don't forget to hit the subscribe button. And until the next time, stay sharp, stay hungry, and stay cash bright.